You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again to rock out for our weekly futures options extravaganza. Yep, it's time for This Week in Futures Options. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever scintillating network upon which so many of you are binging right now. Remember, so many ways for you guys to consume the audio content, of course, on demand on just about every platform on God's green earth these days. If for some reason there is a platform that doesn't list us, it's probably a smaller one, so just hit them up and tell them to list it. Most of the big ones have it these days. You can get on smart speakers or YouTube. You can get it pretty much everywhere. If you ever have a question, a lot of you sometimes will go to a specific platform or outlet, and you'll see that they're missing an episode here or something part of a show. The place to go is our website, theoptionsinsider.com, or get our mobile app available on all the major outlets. That has every episode of every show we've ever done for now 15 years. January, it was 15 years. So terrifying to say, but yes, a lot of great content there for you. While you're at the website, make sure you check out theoptionsinsider.com/secret club. That's where you go to upgrade your experience, get the live streams throughout the week, as well as, of course, pro Q&As on Tuesday, options oddities on Friday. The great giveaways. We just gave away our January crate this week, as well as a whole bunch of other fun stuff. theoptionsinsider.com/secret club. And of course, however you listen live after the fact, keep hitting us up. Those questions, those comments, those insights, those pearls of wisdom we do love to hear from all of you guys and gals out there today. And we have heard from you. We have heard that you guys want more rates. You've been asking for rates. And so we put up the rates bat signal. We said, hey, let's talk about rates. Who wants to talk about rates? I guess it's a big row that we shine into the sky. And who should respond? Who should answer the call? But none other than our old friend, Mr. John Brady, the Managing Director of Global Institutional Sales over there at RJ O'Brien. John, welcome back to TWIFO, sir. It has been too long.
Thanks, Mark. It's great to be here. Crazy day in the markets, crazy day in rate space specifically, but you're very nice to have me. It's an honor to be here. I look forward to the show.
Yeah, I heard things are popping off over there, so I appreciate you taking some time out of your busy schedule to chat with us today, sir.
Mark, I appreciate you having patience and sticking with me and working well together. You're a good partner. Thank you.
All right, let's kick things off then. It is time for the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we break down what the heck is moving to the light side, aka the upside, and to the dark side over there at CME this week. You guys can probably put two and two together and hazard some guesses on your own, but we shall see. And actually, John, my producer's informed me right before the show, you haven't been on since September of last year. That's quite some time. A lot has happened in the market. So maybe really quickly, before we go into the Movers and Shakers from this week, catch us up. This is your first appearance, obviously, in the new year as well. Give us kind of some of your thoughts and takeaways on the completely insane, topsy-turvy year that was 2021, sir.
Well, 2021, right? I mean, look, I think the economy emerged from the COVID trade much stronger than what most people thought, myself included. Inflation was much stronger than what people thought, and we are now in kind of uncharted territory, Mark. So, I was scared that I had fallen from your list of favorites, in the November, December, January timeframe. I felt maybe like an old girlfriend, but it sure is nice to be back. Look, this is what we're seeing in terms of growth and tightness of labor markets and elevated commodity prices, elevated wage pressures, elevated prices on the grocery store shelves is not just a North American story. It is a global story. Inflation in Brazil is running close to 10.5%. Inflation here in the United States by the CPI measure is running at 7%. By the PC measure is running close to 6%. So look, this is a global story. Even the European Central Bank is starting to move here a little bit. And I have to tell you, in a strange way, and I don't want to go too far off down this angle, but I will say this. West Virginia Senator Joe Manchin may have done our society a huge favor by not supporting the Build Back Better bill, because the last thing this economy needs on Feb 10th of 2022 is another 3, 4, 5, you pick the number, $5 trillion worth of fiscal stimulus coming down the pipeline. It really would have been it would not have been an inflation discussion. It would have been a hyperinflation discussion. So look, I mean, at the end of the day, the Fed's got a challenge debt ahead of it. The economy really morphed coming out of 2021 into a very strong, tight labor market, elevated inflation type economy, and the Fed's got some work to do here. So I think the best trades are going to be, look, volatility is going to rise. It screamed here high the last week, really accelerated today, and I think we're in for quite a year. And what traders, rates traders especially, Mark, are going to be thankful for is that concept of dispersion. You're going to get slope of curve. You're going to have movement of curve. Look, we had a soft 30-year bond auction today, tailed by a tick and a half. After the 10-year note auction yesterday, printed through the auction price by a basis point and a half. The 3-year was well received as well. You're just going to have dispersion along the curve, and you're going to have dispersion along volatility surfaces, gamma versus vega, skew versus skew, things like that. And so, look, I think what traders like, right, traders want is they want opportunity. And opportunity comes through dispersion, and we've come through 2021 into 2022 with dispersion, with asset price dispersion, both in your single derivative, i.e. the futures, as well as your secondary derivative, the options. So we're excited.
Yeah, a lot to be excited for. And you're right, no matter what side of the aisle you're on, whether you wanted more spending or less, it is easy to see the dark side of all that stimulus you've already done hitting and coming home to roost right now. So you're right, a lot more spending would have been just adding a lot of fuel to the fire, regardless of how you view that from a social or political context, from a straight economic perspective. That would have been dangerous waters to tread in. Interesting stuff. Speaking of dangerous waters, let's dive into those right now. John, it is time for our movers and shakers. So you know what I'm going to ask you now. Where should we begin our journey this week? To the light side, aka the upside, or to the dark side movers, sir?
Let's go to the dark side. Things are repricing. Let's go to the dark side, Mark.
All right, to the dark side we go. You're right. Getting a little bit of dark side on the screen this week. We got some dark side movers. In fact, if you guys go over there, you follow CME on the old Twitters, listeners, or you follow us, we always put it out as well. You'll see we put this chart out right before it's showtime. And you'll see it is about, I'd say, roughly 2/3 green, 1/3 red. Of course, 1/3 red. If we waited a little bit, that might change. We're seeing a lot more red on the screen out there today. But the biggest movers from a percent base, actually, it's almost tied. It's almost tied. So we shall get there in a second. First, let's go to the dark side here. Platinum, back to the metals. Listen, this has been a frequent offender of late. It's off another 2.84% for number 5 to the dark side. It was number 5 in the exact same position last week, off 2.11%. So off roughly 5% over the past couple of weeks out there for platinum. Again, it was 50-odd contracts last week, so it's not really a big option story, unfortunately. Number 4, out to the rates. I got a feeling we're going to be heading there today. The Ultra 30-year, off 3.17%. Number 3, back to the metals. It's palladium, 16.84% to the dark side. It was number 2 in the same direction last week, off 18, almost 18.5%. Nat gas taking a breather this week as well, off 19.62%. And number 1 with a dark side bullet this week, the euro dollar is taking a bit of a hit, 24.49%. Sometimes it's hard to process what that euro dollar number means. Nick has even said to us here on the show, sometimes there's so many moving parts. When you're talking about euro dollars, it extends out for years or strikes in months at pretty much every expiration. So sometimes getting an aggregate number for euro dollars is a little bit challenging. That's why we have sometimes these, shall we say, aggressive numbers like a 24.49%. But we'll unpack that a little bit more in a bit. To the light side we go now. You know, it's a crazy week to the upside when Russell 2000 is up about 5% and it can't even crack the top 5. You got to be up 6.53% to break the top 5 today. That gets you to KC wheat. Number 4, staying in the ags, we got oats up 6.75% pretty much. It was number 2 in the same direction last week, up 11.68%. Number 3, still staying in the ags, soybean meal, up 7.5%. Number 3, it was actually in the exact same spot. Number 3 of the upside last week as well. It was up 9.6% last week, and then another 7.5% today. So a good couple of weeks for soybean meal. Number 2, and actually number 1, these are 2 names that if you guessed any random week, you guessed these 2 names, to the top or to the bottom, they'd be leading the dance. You'd have a pretty good chance of being right. This week we get both of them and we get them to the light side. Number 2 is lumber, up nearly 22%, 21.9%. And we got the old BTC, Bitcoin, rallying 23.98% since last week's show. So a lot of upside. If you throw nat gas into that conversation, usually you have a good chance one of those 3 appearing every given week. But we got John joining us. Rates are top of mind for a lot of you with that CPI number coming out this week. So we have to begin our journey there. It is time to explore the world of rates.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, let us begin our journey into the world of rates. You guys know where to go to follow along with this show. CMEgroup.com/TWIFO, TWIFO, or /TWIO. Both of those will work. Both of those will get you here to our reports, which are running updated constantly for you 24/7 and always free. CMEgroup.com/TWIFO. In this case, you're going to go to the asset class and we're going to go out to rates. And then you'll see from there, we have many choices. So, John, we have a lot of places where we can hang our hat first. I'm curious for you, obviously a big week in the rates complex. You said your desk is popping off as we speak. Big CPI number coming in this morning. I was kind of surprised at the surprise to this number. I was expecting a big number, so maybe the surprise to the surprise was a little surprising to me. But still interesting stuff. What were your thoughts on the CPI number this week? And again, since we haven't had you on in a while, what are your thoughts on what we've been hearing out of the Fed and Powell and his company in the last couple of weeks, sir, as well?
Yeah, well, Mark, listen, when Chair Powell spoke at his press conference following the late January meeting, he said that, he made a point to suggest to the market that the Fed was going to be very humble and modest in terms of how they address policy. And look, the Fed's on a tight wire here because whereas inflation has really taken off, the Fed has not been wrong. They've been very wrong in suggesting that inflation was transitory. Remember that 2020 term? It has not been transitory.
It's funny you say that because we don't talk a lot about anti-Fed here on the network, but over this past year, I've never heard as many people don't even talk about the Fed, John, coming out and just disagreeing with the Fed wholeheartedly. I don't care what side of the aisle they're on, where they fall from an economic stripes perspective. just about everybody is out of step with this Fed, it seems like, at this point.
Yeah, you're right. And Mark, you said it. The Fed's been politicized. The Fed's always been a political animal, but it's been kind of openly politicized now. And I'm not going to go down that road. What we can say is the Fed has been wrong. They've been very wrong in the whole idea of this inflation being transitory. And what really spooked the market today is the size and pace of the acceleration. Headline year-over-year CPI accelerated 50 full basis points from 7% to 7.5%. In 1 month. And it's not just that, Mark, but it's also the fact that last night, in a very undercovered story by the mainstream media, a very undercovered story was the domestic crude stockpiles, where Cushing is now running extremely low, at 4-year low in terms of oil supplies. You saw the oil complex today. Really strong bid. And that's with a dollar. The U.S. dollar moved really high as well early on here on the CPI number, anticipating 50 basis points by the Fed, and then kind of came off a little bit. But oil has really stayed strong. And so look, this acceleration that we saw today, some economists before today's number, Mark, had been like, look, we're going to get an ugly number for January, i.e. today's number. We're going to get an ugly number for February, which is March 10th, by the way. Your traders may want to circle that date, Thursday, March 10th, because that's less than a week ahead of the March 16th FOMC meeting. So you're going to have a lot of gamma risk and pin risk and things like that there. But anyways, it's the acceleration that suggests to traders in the market that we're not going to get 1 or 2 ugly months of inflation. We could get more like 5 to 6 more. And if that, in fact, is the case, then the Fed's got a lot more hiking to do. And what that's going to lend itself to, friend, is the fact that with all the outstanding debt that Uncle Sam has out in the open market, the Fed can only get to 2 or 2.25%, 2.5% before the cost of rolling over that debt or issuing new debt will suck up a tremendous percentage of federal tax revenues. And then that becomes a problem. When you have to fund things like Social Security, domestic spending, national defense, things like that, foreign relationships, when a greater percentage of your tax revenues are then going to finance your existing, not even your existing debt by paying off coupons, you're going to have a little bit of an issue. And so what really is going to come to the forefront here, Mark, we believe in rate space, is the Fed's going to get to 1, maybe 1.5% in a hurry. They are. But then it's going to be about the balance sheet. They need to unload this balance sheet. They own about they own close to $9 trillion worth of Treasury and mortgage-backed securities. Their current holdings of assets run about 35% of GDP, and they need to sort of start to kind of get rid of this stuff and put it back out in the open market. And that's where volatility across the curve is really going to spill over into other asset markets, because you'll have a repricing of mortgages, you'll have a repricing of short-end rates, belly interest rates, long-end interest rates. So again, for those traders out there who like dispersion, who like volatility, who like risk, not only would I put on the seatbelt, I'd roll up the window and I'd lock the doors, because it's going to get goofy.
Goofy, it's a good term for it out there, John. We're already hanging out in the rates complex. We have many different choices where to start. Obviously, we saw the Ultra and the Eurodollars in our movers and shakers, so we could start with one of those. Or is there another product you want to hang our hat in first in terms of the rates, sir?
Well, look, let's stick with rates, but I do want to make a comment. Thank you. So I do want to make a comment. You had mentioned earlier, astutely, Mark, very astutely, about how the Russell had outperformed in the last week since your last show. Look, the Russell led the way down. The Russell was the first equity index to sort of sniff this thing out, this inflation story out last July and last August, right? And so on a relative basis, on a relative basis, you're going to see the Russell outperform the Nasdaq and the S&P, because it's already got more price into it. In the front of the curve, let's go to rate space, Mark. And again, thanks for your patience. In rate space, the trade right now is in the vol skew, is in the put skew. 10 delta puts in December Eurodollars, trading a full 3.5 ticks over 10 delta calls. That is the widest it has been since at least the global financial crisis. So whereas the Fed was able to take short-end rates up to 1.75% in the latest expansion, as you recall, 2018 into 2019 before the COVID reversal, the market, December 2 Eurodollars, are suggesting that the Fed could even go higher. At least that's what the options market is pricing. And so that's kind of where the opportunity is here and now. March Eurodollars right now on my screens are trading 99.28 mark. They have a 90% chance of the Fed hiking 50 basis points at the March 16 FOMC meeting. April Fed funds mark, April right now is trading at 46.5. That's 53.5 implied. If you have overnight rates at 8 basis points, then essentially 53.5 into 58 is roughly going to be about 92% chance of the Fed going 50 basis points. So the front of the curve is not only building in that 50 basis point move by the Fed in March, but it's the option markets, it's the put skew mark, which are standing on their heads. And it's the way out of the money puts that I think traders kind of want to look at. The 97 even puts are 3% LIBOR. Let me tell you, I don't think there are a lot of people out there, really large pools of capital, who think that LIBOR is going to be able to get above 3% by the end of the year. And so that's kind of some of the trades that we're sort of looking at right now. We've come a long ways in a hurry, especially today. December dollars being down over 26 basis points just on the day. So it's the put skew where that 10 delta, the 5 delta stuff is really, really rich, and that's where the opportunity is, we think.
Let's get into some of those trades. By the way, it sounds like you're putting up some orders as we speak. So why don't you fill some customers while I regale us with what's going on out here in the Eurodollar options? Because you're right, it is interesting to watch from an options perspective. I send, again, listeners, cmegroup.com/TWIFO. Go to that rates complex. Get on out to the Eurodollars. We're going to hang out there. Now, I know when you first look at it, it can be a bit intense. You're looking at almost 5 million contracts on the tape already. So this is about 4.8 million. So this does some paper. So this is not a silver with 20,000 contracts or even a nat gas with 400,000. This is kind of its own beast entirely. And of course, as John mentioned, it kind of is a bit of a throwback to the old school, still quoting things in 16ths and 8ths, which is kind of refreshing for me, as that's how I cut my teeth in the business. But I know for a lot of you newcomers to the space, fractions just throw you for a loop. So, 16ths and 8ths out here in the Eurodollars. As John mentioned, at about a 99.28 coming into the start of the show, off a little bit, off about 0.1 or so on the week here. And he mentioned the D's being where the action is. That is the case. Nearly 20%, 19.4% of that nearly 5 million contracts, listeners. So nothing to sneeze at going up in this D's contract here. What is the volume? You may be asking yourself in this front D's contract here in the Eurodollars. People think of the rates complex and they think of sleepy, the 30-year 4 vol and that sort of thing. Maybe if it gets up to 6, things are rocking and rolling. You're talking triple digits right now in this D's contract here in the Eurodollars. 100.35 is your at the money vol in the D's Eurodollars contract right now, up nearly 17 points. This is Bitcoin vol. Listen, this is nat gas vol. This is Tesla on a rockin' day kind of vol. That's what we're seeing out here in the Eurodollars complex. And John mentioned the skew. Let's get to that. He mentioned the 10 delta skew. Our quick skew reports here are This Week in Futures Options reports measure a 25 delta put and call, but it's going to give you relatively the same information. We're seeing right now the puts last week were bid 7.1% bid. So we're already talking 100% vol for the at the money contract, which still makes me chuckle. In the Eurodollars, you're going to pay, listeners, another 7% on top of that to get the puts. And this week it's up to about 7.5%. And the calls last week, 4.8% cheap. And now this week, 1.4% cheap. So John is right. The puts are where the bid is. The calls are still comparatively cheap. They're still, the at the money vol is still high, but a little bit of a discount there for the calls. Not something you see all the time out there in the Eurodollars. And in terms of the most action, what is the hot contract? What is lighting up the tape out here in the Eurodollars this week? Well, it is in that D's contract. 98 3/8 puts, listeners. How fun is it to say that again? Doing a whopping 126,000 contracts so far this week. The big day was Wednesday, 54,000. Tuesday, 43,000. And then today, only 20,000. You think maybe a little bit more going up given that we had the CPI number today. But today is actually so far comparatively quiet. Only half the day. So we could catch up with Tuesday if this keeps up. Monday, kind of nothing. Only 8,500s. Everyone was keeping their powder dry heading into Wednesday, it seems like, out here. That was followed hot on its heels by the 98 even puts, doing almost 100,000 contracts, kind of evenly split throughout the week. Again, with the exception of today. Kind of strange that the post CPI session is not where a lot of action is happening. But we had the big day for the 98 even puts, 34,000 going up on Tuesday, 27,000 on Monday, 25,000 on Wednesday, only about 10,000 today. So a little bit lighter out there today. Again, this is post CPI. I think we'd be seeing a little bit more action, but a lot of the action came fast and furious earlier in the week. Let's just look really quickly. Also have the 98 quarter puts. So it's kind of a bit of a put strip from the 98 and 3/8 down to 98 even strike in Dees, where the action is this week. 98 quarter puts doing about 67,000. Again, each of these is more than a lot of the entire metals do sometimes. Let's say your platinum, certainly, but even your silvers and other things. 67,000 for the 98 quarter puts, the big day Tuesday. So 53,000 of that 67,000 went up on Tuesday. So it was all Tuesday, 10,000 on Monday. The rest kind of scattered. Only 500 going up today. So surprisingly light after the fact paper out here in the euro dollars this week, listeners. It was all kind of leading up into today's number, which is kind of fascinating. We got paper again. This is an active product. We got paper lighting up the curve all the way through, but it is that D's contract where most of the action is. John, before we roll out of rates, because I know it's a busy week and I know a lot of our audience loves rates, is another product in the rates complex you think we should visit first, sir?
Yes. Of course there is, Mark. There's always
there's always rates.
Complex, right?
If it was you want to do a whole show on rates, right?
That's exactly right.
You put up your trades. I'm going to pull up here. I think we should go, because we've had a lot of interest of late in the 10-year as well. So let's get on out to there next. You go on out to the 10-year, listeners, and you'll see it's no slouch itself. I mean, the whole rates complex does just a shocking amount of paper sometimes. 2.5 million contracts on the tape already out there in the 10-year. Now, this is kind of coming back to where we're talking about with the sleepier vol. Euro dollars, you can go out a year, you're still paying triple-digit vol. The 10-year, though, 5.5 right now, 5.4 actually. That front Feb contract that has 1 day to go, that has a whopping 7 vol. But again, it's 1 day to go, so it's not really vol anymore. It's just gamma. But still, if you go a little bit farther out, you're talking about 5.25, 5.5. That's where we're hanging out. Looks like 48%, so almost half of that 2.5 million contracts going up in the March contract. The vol, again, 5.4 out there in this one. Put-wise and just skew-wise in general, we are seeing a similar shape, but a little bit less, obviously. The puts were bid last week. The puts were 6.1% bid in the March contract. The calls are 4.1% offered. So you're seeing a bit of almost a mini equity skew out there. This week, that has come in a little bit on the put side, at least. The puts are now only 2.9% bid. The calls still offered, 4.4% offered. So upside, not where the action is this week, at least from a bid perspective out there in euro dollars. And in terms of where what the hot contract was this week, what was leading the dance in this 2.5 million contract palooza out here in the 10-year, it was the 126 even puts. Right about, if you're wondering, listeners, at about 125.25 coming into showtime on the 10-year. 126 even puts. So now in the money puts, doing a lot of paper this week. The big day today. Now this is kind of what I expected more post CPI from the euro dollars that we weren't seeing, where the lion's share of the action going up today, nearly 72,000. So pretty much almost half of that $1.50 and change going up today, followed by about 40,000 on Tuesday, 28,000 on Wednesday, 17,000 on Monday. Again, back and forth all week, so it wasn't really biased opening or closing in either direction. Hot on its heels, we have the 125 even put. These are kind of pretty much close to the at the money puts here now, doing 134,000. And the big day again today, 57, almost 58,000 going up today, 38,000 on Tuesday. Not a lot of action on Wednesday, 18,000 and then 22,000 on Monday. So intriguing how the 10-year following a little bit of a different liquidity pattern than we're seeing out there in the euro dollars. And hot on its heels, we have again a put strip, the 127 even puts, also doing over 100,000 contracts. So 127,000 of the 127 even puts. The big day was actually Tuesday there, 38,000 on Tuesday, about 36,000 almost today, 28,000 on Wednesday, 26,000 on Monday. That one, unlike the others, was pretty much closing all week long. So a little bit of a bias there, but you can do a whole put strip here, listeners, and keep getting over 100,000 contracts for each for a while. That's how much action there was in the downside here in March in the 10-year. John, has the 10-year been on your radar and the radar of a lot of your clients over there at RJO this week, sir?
Absolutely, and the 10-year has been. The 7-year point mark certainly has been as well. 10-year yields climbed above 2% today. I know they got as high as 202. I haven't been able to look in terms of see where they are right now. I will bring them on up, but there is anticipation of a convexity trade mark. So again, the sort of the belief that look, as the market sells off and these mortgages kind of lose their prepayment optionality, they need to be hedged out in books, and that usually takes place by selling treasuries against them. As rates head higher, people who own mortgages don't want to have mortgage rates that are locked in at kind of low yield, so they hedge themselves by selling out treasuries to try and capture that. And yes, no, options have certainly been on our radar in the March and April 10-year put sector as well. 10-year treasury yields right now are trading at 2.03%, and so look, there's a measure of convexity that needs to be hedged here. So the belly, especially in the overnight, I think with Asian investors, you're going to see probably the belly of the curve probably get beaten up a little bit, in the TY and the UXY contracts without question, yes.
And John, we got a lot of rates fans in our live audience. We've got Age of Delaquaria saying here, because all of the confirmation hearings, I think the Fed has been talking more than they're going to do. I predict 2 hikes this year and 25 basis points in March, and another hike much later in the year. Just my opinion. So, John, what do you think of our audience's prediction for rates hikes, sir?
So, Mark, on trading desks and in trading pits, right, way back in the day, right, they one of the fondest trader sayings, but really sort of a profound lesson was that the only ones who are really good at picking tops and bottoms are the monkeys in the zoo cage. And we don't want to pick tops and bottoms here. What we do know is that a headline CPI figure at 7% or at 7.5%, could print at maybe 8% next month. We would be hesitant, just personally, to say the Fed's going to stop at 50 basis points and we'll only do 25 basis points at the March meeting. The market is telling us the Fed's going to do 50. And we would suggest to our clients that the balance of risks are they'll get a little more aggressive than that. So 50 seems a little bit low, perhaps ambitious, maybe a little bit a better way to say it. But we think the Fed probably wants to get at least closer to 1%. 1% before doing their balance sheet, their quantitative tightening, and their shedding of balance sheet assets that they have. I do want to flip back, Mark, really quickly to a previous question. I got pulled away rudely, and I apologize. Something else for your listeners and for you to consider is this. The SOFR contract is taking off. Open interest, and your listeners need to know this, open interest in SOFR futures and SOFR options is exploding. And as the Fed gets going here and attempts to normalize rates or to get at least pushed back from the zero bound in a significant way, keep in mind that in June of 2023, LIBOR will cease and we will go to SOFR. And that transition is taking place now. So in a time of elevated, volatility, in a time of repricing asset classes, you have the largest interest rate transition in the history of this solar system taking place over the next 18 months as we move from LIBOR-based swaps and products to SOFR-based swaps and products. And that, too, is only going to create opportunity within the interest rate sphere for you and your listeners.
That's right. That's not a point we bring up a lot, but you're right. The SOFR numbers are continuing to climb every day. We are making a big transition out there in that complex. So it will be interesting to see how all that plays out. There's enough going on in rates. We could probably do the whole show on them, but you mentioned equities. I know you hang out in equities. There's a lot going on out there these days as well. So let's head on into equities next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, let's get on out to the equities, listeners. Go into that drop down there, go out of rates, go up to equities, and then scroll over. We're going to hang out in the Russell 2000 first, but you can hang out anywhere you want. You want to go to the NASDAQ, you want to go to S&P, whatever floats your boat, it's all there for you. John, you mentioned you've been watching small caps a lot out there. What's been lighting up your tape and the tape of your clients out there in the equities as we've seen no small amount of volatility and tumult to kick off the year, sir?
It's been these weekly options, Mark. These weekly options have been such a great product on the E-mini and on the NASI. It can become it can quickly become, like we saw today, a tremendous gamma trade. And so that's really sort of been the opportunity for us in the 10 and 20 delta stuff, as well as the end of month type stuff, the end of month options. Just to from a money manager portfolio perspective, you think about large pools of capital, they love the end of month stuff because the book marks against the indices at the end of month, makes it very easy for them to report to their investors and to their partners. And so that sort of has where the opportunity has been. Again, I think the Nasdaq, right, has certainly kind of led this sell off. The sort of belief is that, some of these larger cap Nasdaq names certainly have a duration component to them. So the relationship between volatility within the Nasdaq and the volatility within short end rates, the correlation is certainly very strong. And I think that's kind of sort of been where the trade has been. Stocks, for the most part, have bounced from sort of oversold levels, but at these types of levels, given the activity that we've seen today, it looks like stocks are now going to kind of pivot a little bit and probably retest their year-to-date lows made in late January, and probably kind of break through them a little bit. Even though earnings have been decent in equities, we're going to have to reprice to a higher inflationary environment where profit margins are under pressure because you have rising wages, and can price hikes of products stay up with the rises in wages? If not, then margins get compressed and equities reprice, and that seems to be the trade amongst our clients.
Let's see what the trade is over there at CME. We're going to stop off in the Russell 2000. Actually, before we do that, let's set the table here from an overall vol perspective. Kind of hard to talk equities without talking the flip side of that coin, which is vol. And we got a little bit less than we did this time last week, but as the day progresses, that number is going to be ticking up, it seems like, as this sell-off does seem to have a little bit more legs now than it did even back when we were doing the option block an hour and change ago. Let's get on out here to a small cap vol first. RVX, when we kicked off the show, it was still north of 30. It was about 30.6. It had come down about 1.3 points. I'm sure if you run that again right now, probably getting most of that back. VIX cash was at about a 23.5 when we kicked off the show. That was down only a half a point at that point. So things starting to get a little bit firmer, a little bit frothier out there right now. VVIX, which is the volatility of volatility, hovering at about a 130 when we kicked off the show. That's up a little over 6 points from this time last week. And VolQ, which is the at-the-money vol of the NASDAQ, at about a 26 even when we kicked off the show. That's down nearly 2 points still from this time last week. That puts that VIX to RVX, so that small cap to large cap vol spread, a little bit wider than 7, about 7.15 points. Now, that's still a little tighter than it was this time last week, about 3/4 of a point tighter. That spread's kind of been all over the place, but right now it is still pretty wide, not usually that wide. Usually it's somewhere around half of that. And then we have VIX to VolQ, so the S&P vol to the at-the-money vol of the NASDAQ. Remember, VolQ doesn't have the skew component, so VIX to VolQ is not quite an apples to apples. This may be more of a Golden Delicious to a Macintosh kind of comparison. But that's at about a 2.5 right now, that spread. It's about a 1.5 tighter than it was this time last week. So VolQ getting frothy, VIX getting frothy. But let's get out to the land of the paper, see what's lighting it up out here in small caps this week, listeners. And again, coming into showtime, we are seeing small caps back up over the 2,000 level. They blew through it to the dark side not too long ago. Up nearly 50 handles this week, or about 2.5%. So small caps getting a bit of upside. Of course, today's session may be changing that a little bit afterwards. But a little bit of red on the screen out there today. And as is the case with most of our equity products, I should say, 30% of that paper going the way of the dodo tomorrow. If you're wondering, the at-the-money vol on the contract going out tomorrow in the small caps is at a 40.5. So we're getting frothy out there. If we dial it out a little bit, let's go a little bit farther out. Let's go into a little bit more of the weeklies. Let's see. Let's go out here to... Let's see. If we go out to March, that is about a quarter of the paper out here. By the way, about 30,000 contracts on the tape already out here in the small caps this week. And about 23% of that going out in March. The vol in March, a little bit closer to what we're seeing in RVX land. The vol in March at about a 27.5. That puts it up about a 1/4 point. So actually ticking up now on the week. In terms of skew, it's pretty similar to what it was this time last week, getting a little bit heftier. The puts last week, 18.3% bid. This week, nearly 19%. The calls last week, 13.9% cheap. This week, 14.3%. So puts getting more expensive from a vol comparative perspective, and the calls getting a little bit cheaper out there. And in terms of what the action is, it is the 21.5 calls in March that are leading the dance. Not what I expected at all. So out of the money calls, people still like to know about the upside, quote unquote, small delta calls. These are roughly 100 handle out of the money contracts here. So not that small of a delta, but they have about a month to go. So they're not exactly big delta calls out there. They're leading the dance this week. That's where most of the action has been, followed by the 2100s going out tomorrow. And speaking of things going out, this show, we've already been talking about rates for so long. We're coming up against them. I know a lot of you like to sling a little bit of energy these days as well. So let's head out there next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, let's get on out to the energy complex. You guys know where to go. Get out of that equity index complex or the drop down there. Go up one notch to energy. Then we're going to hang out there in nat gas, which is on the movers and shakers list, nearly 20% again this week, listeners. So a lot of movement out there in nat gas. John, you mentioned kind of the inventories for WTI earlier. Energy is kind of an inescapable product right now. Even people who don't really follow a lot of the commodities or trade them have been listening to and paying attention to what's going on out there in the nat gas and WTI world for a lot of reasons, a lot of them geopolitical out there. So, John, I have to imagine a lot of your clients over there at RGO, and they're not ringing up about rates these days, are calling up about the energy complex. What are you hearing and seeing out there in the world of energy these days?
Well, look, it's the part of the trade, Mark. I don't want to say all of it. Part of the trade, though, in crude specifically, is the lack of backwardation in the crude. In other words, some of these further contracts are actually trading at a discount to the spot price. Right, March crude right now is trading right around $90.12. But July crude is trading at 83.83. So that's the August, and then December's at 80.49. There is a belief that we're going to see backwardation take place, and that is where the farther contracts traded a premium to the spot price. And a lot of that has to do with not just strong domestic demand, not just strong global demand, not just kind of what we call liquid or fluid geopolitical developments. You can say Ukraine, but also too has to do with the demand side. With wages up, with the labor markets tight, with the U.S. consumer mostly flush, that some of these back contracts in the crude oil are a little bit underpriced relative to the front contract.
All right, let's get on out there and check for ourselves, listeners. We started off in nat gas, so we'll hang out there first, even though we haven't checked in on our old friend WTI in a while. WTI is still north of the 90 handle right now, listeners, but we'll get out into nat gas because that one has been popping off as well. Of course, all the headlines coming out of the Ukraine region, keeping it in the spotlight for a lot of folks out there. Nat gas coming into showtime, shy of the 4 handle again, 398 in that front March contract. That's also where still about a third of the paper went up. How much paper went up in nat gas this week? Nearly 500,000 contracts on the tape right now, 476,000. So a pretty active week out there in nat gas. Again, it's not a 10-year or a Eurodollar, but few products are. Let's get on out here to the March. Again, it has about 13 days to go, so right within our cutoff. And again, everyone's playing this kind of high gamma trade right now in nat gas. And it's hard to blame them. The thing's moving 20% at a clip. So you want to be in that front portion of the curve, get a lot of gamma more than the Vega going out here. And right now, let's see. The vol speaking of Vega, the vol in that front March contract, 52.5 off 18 points. So vol coming in dramatically out there right now. So if you're looking for a little long premium spec out there in front portion of the nat gas curve, it's cheaper this week than it was this time last week. In terms of skew, last week the puts were 5.2% cheap. This week coming in even more, 6.1% cheap. The calls last week 7.4% rich. This week 9.4. So calls getting bid, puts getting offered. That's kind of what you would expect as you move down the skew curve a little bit, but it's like a little bit of extra juice popping into those calls. So maybe some folks looking for a bit of a recovery, a bit of a rebound. And in terms of the action, what was the hot contract out here this week, listeners? It was the March 3 3/4 puts dominating the tape with about 20,000 contracts. That's pretty much about a quarter of a point out of the money right now. Active all week long, 6,000 contracts a day, if not more, except for Tuesday. So a pretty active contract, mostly opening throughout the week as well. followed hot on its heels by the 4 even puts. That pretty much is the at-the-money put right now, about almost 20,000 of those going up this week as well. The big day there was Monday, 7,500, 5,300 on Wednesday, 4,000 on Tuesday, only about 3,000 going up today. And back and forth there, not just opening, but kind of back and forth. This probably would befit the at-the-money strike. Also a lot of action in kind of a tie for third between the 3 half puts and the 5 calls, all in March, both doing about 15,000 contracts exactly. Let's go to the calls really quickly first because they win by ever so slightly. The big day for them was actually a tie between Tuesday and today, both about 4,400 contracts, 3,700 on Wednesday and 2,400 on Monday for the calls. Most of those closing. So folks getting the heck out of Dodge on the call side this week, which again makes sense. And then out to the put side of the ledger, the 3 half puts doing about 15,000 contracts as well. The big day was Wednesday, 5,500 going up there, 3,000 today, also 5,300 on Monday as well. So, and then mostly closing on the earlier sessions there for the 3 half puts as well. So intriguing stuff here in nat gas. Again, this product has been rocking and rolling quite a bit. Let's look a little bit farther out, then we'll get to some of your questions, listeners. Let's see, 3 half puts doing about 13,000 contracts also out there in the April contract, so pretty active out there. If you like some upside, 6 calls going up about 7,300 times, listeners, in the May contract. So it's not all downside all the time. 6 calls also active in June, doing about 5,000 there as well. So you're talking about 12,000 contracts between April and May just on the 6 calls there. 5 calls, pretty active out there in the August contract out there. So it's not all downside. Some folks may be thinking there still is a little bit of upside afoot here as the situation over there in the Ukraine continues to play out. You know what else is always fun to play out? It's your questions. So let's get to a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your questions here. Let's go. Yeah, you already answered a bunch of our chat, John. They had a bunch of questions about your predictions on basis points and Fed cuts. You already kind of touched on that. Let's go to this one here from Options Queen, also in our live chat. She wants to know, does RJO have a lot of retail customers who trade Eurodollars? I know it's a primarily institutional product. You're on the institutional desk, John, but do you see any smaller clients slinging Eurodollars these days, sir?
So I don't see them off this desk, Mark, but we do have customers and clients who do trade Eurodollar futures. Indeed, we do. Look, most of our retail base does tend to kind of trade kind of a litany of products. As you know, the history of R.J. O'Brien is really in the agricultural sector, but we have successfully diversified over the course of the last 10 to 15 years to do many more financials. We have an institutional financial team here that kind of sort of does what I do. But in terms of retail customers, without question, look, we have at RJO Futures, which is our retail arm, we have a number of very compelling and intelligent salespeople who help clients navigate these tricky waters. And I would highly suggest our sales force at RJO Futures are kind of considered the best globally in terms of what they do, handling retail accounts, handling retail orders, and things like that. They're very well thought of, and they're nothing but a fantastic group of professionals.
Well, staying on that tip of helping newcomers to rates, we have a question here along those lines from Big G. I like Big G. Big G's handle. Big G wants to know. He says, hello, TWIFO crowd. Well, hello, Big G. I've been watching the rates complex from afar for a few months, and I'm thinking about diving in. I know enough to steer clear of the Eurodollars. That's a good starting point, Big G. Stay away from that. He says, that product is not for me, but where do you think I should start as a relative novice? Cheers. Big G, probably sounds like another listener from across the pond wanting to play in the rates complex. John, you kind of just talking about this, kind of the retail action you're seeing in rates. If someone like Big G calls you up and says, I'm thinking about dipping my toes in rates, but I'm not sure where I should start my journey on the curve, what do you usually recommend for them, sir?
You know what? If they're going to start and they're novices to the product, they want to start on the very short end of the curve, maybe trading Fed fund futures. It's a very clean, asymmetric product in terms of Fed policy, Fed expectations, repricing of Fed expectations, and the DV01 is pretty clear. It's pretty clean. You tend to target quarter type moves, so like 98 even and 98.25, 98.50, things like that. There's a little bit of very kind of basic algebra that tends to be involved with the settlement price of Fed fund futures. Each of the contracts a year out are very deep and liquid. There are opportunities within spread markets, so 1 month spreads, April to May or June to July, are deep and liquid. They trade around the clock. I would start with Fed fund futures if I were just starting in at the rates complex.
All right, another one coming out of the rates complex. This comes from Trend Wizzo, another great handle. He actually sent this into our options bootcamp show, so we discussed it there. But he asked, does the U.S. 10-year have a gamma squeeze still in play? And please ask this question for TWIFO. I like this show. So you're getting lucky. You're getting a twofer here this week, Trend Wizzo. John, are you familiar with this term of gamma squeeze, where obviously a lot of the market makers are caught being short strikes, mostly to the upside. And so as they blow through it, they have to kind of buy back their gamma, and it kind of is a catalyst to help accelerate the upside move. Are you familiar with that term? And if so, do you think there's one playing out right now in the 10-year? That's what Trend Wizzo wants to know.
So I think there's not a gamma squeeze taking place on what we would call the receiver skew or the call skew. There's certainly not. I think the best way to answer that question is to say if there is a gamma squeeze taking place, it's going to take place in the put skew, and it's a convexity trade because of these mortgage holders. So these mortgage holders, if they're holding 2% mortgages and yields start to head higher, they need to hedge themselves. They've locked themselves into receiving 2% in mortgage-backed securities. They need to sell treasuries, and that's where the gamma squeeze would come from the end user side of things, Mark, not from the locals or the market makers, and not perhaps a little bit maybe from bank portfolios, but really, end of the day, it's asset managers who hold large pools of mortgages, or who would experience a gamma squeeze, but it would all be on the put side. It would be on the payer side as we sort of neared expiration. So there is the possibility for that. I think much of your listening audience knows that 10-year Treasury options for the March bucket expire next Friday, March 18th. So in the next week, right, within a week, maybe 6 trading sessions to go, is a gamma move to the downside based upon mortgage convexity possible? I think there's some out there who would argue that it's probable. So, yes.
There you go, Trend Wizzo. The answer is yes. That music, unfortunately, means we've come to the end of an epic journey through the world of rates and also equities, a little bit of energy, and, of course, a whole bunch of your questions. But we got to let John get back to his customers and clients. We can deactivate the rates bat signal for right now until we need it again. But, John, before we go, if there's anything you want to leave our audience with in terms of thoughts or outlook for the future, if you want to tell them where they should go to check out more about RJO, now is the time, sir. The floor is yours.
Well, you're nice, Mark. And listen, thanks so much for having me today. I apologize for having accidentally gotten disconnected with you. You're a total pro. Thank you very much. It's really an honor to be here. Look, I think rate space is going to be tremendous opportunity this year, and I think for those in your listening class, I think you have to kind of remember that within the rates complex, rising volatility is going to lend itself to rising volatility in other asset classes as well. We never even touched on foreign exchange, right? The single largest market out there. So I think traders and listeners to your show want to be kind of cognizant of what's going on within volatility, within futures options, within the rate space, because that will be the epicenter of the volatility universe that we're going to see this year and maybe even next year. That having been said, I can't say enough, great things about RJ O'Brien. We're a 110-year-old firm, the oldest founding member firm of both CME, CBOT. We continue to expand our presence globally with a large operation, not just in London now, but in Dubai. We're representing the Far East as well. We offer services to all of your listeners, whether it be electronic access, clearing, institutional execution, research, or whatever else. Really, here at RJ O'Brien, our motto is service is our name. And since we don't do any proprietary trading here, we have never done any proprietary trading as a firm, Mark. Our interests are always 100% aligned with the interests of our clients, and that differentiates us from other places on the street and within the exchange universe. So give us a call. We'd have an opportunity to earn your business, to compete for your business, as we like to say to our clients. And again, Mark, I certainly appreciate the opportunity here.
Well, we appreciate you joining us today. You can check them out. RJ O'Brien, pretty easy to find. Type them in to your browser. Give them a follow on the old Twitters as well, at RJ O'Brien. All one word there, listeners. You can see what they're putting out in between their appearances here on this program. Of course, you know where to go to learn more about all of the products we talked about on the show today and the action. You can run your own reports for yourselves. CMEgroup.com/TWIFO is the place to go to learn more. And of course, if you're intrigued by all things small caps, and given how much is moving these days, who isn't the place to go? FTSERussell.com, FTSERussell.com. Check it out there. They have the COVID Impact Center, all the news. It seems like we're coming up on a recon again not that long from now, which is kind of crazy. It seems like we just did that, but it's on the radar there again, and a whole bunch more. FTSERussell.com, the place to go to learn more. We got to get on out of here. Don't worry, we'll be back again tomorrow, live noon Central, 1 p.m. Eastern for Volatility Views. There's a lot of all the view these days, so should be a fun one, followed right after that by Options Oddities for all of our secret club friends. And then we're back again next week, kicking it off the option block on Monday, all the way through to another Thursday, another episode of This Week in Futures Options. We'll see you then.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.